Terrific. You should be able to see my screen with a bit of luck. Yep, good. Okay, let's just move the chat out of the way. Move that down out of the way. Okay, I've actually started with silver because really just to pick up on the points Anna was making, there are several examples here of volume price analysis, and the importance of, yes, seeing the signal, but in addition to that, being patient and waiting for that to develop. This could be any chart, any time frame, but let me just pop this one up. This is, as I say, this is silver futures. And there's just a couple of really nice examples here. We've got, first of all, we get the trap move here. This is 1 o'clock our time, so we're now 5:30 UK time, so this is 1 o'clock. This is when the US cash markets begin to open. So obviously you've got the increase in volume and you've got a lot of volatility coming in. You get this trigger, you get decent volume under there. Clearly, it's a volatile move, it's a volatile trap. You've got the volatility trigger comes in on the candle itself, that'll trigger in real time. In other words, the market's raced up. A lot of traders will have jumped in on that, on the fear of missing out. Then they get trapped into the reversal as it closes off. Then we get the congestion phase, and then we get the rollover into a nice move lower. And that's the key point. You will see these signals all the time. Volume price analysis gives you all these signals. You get weakness, you'll see the signal very clearly, you get very excited, you think, yep, okay, I want to jump in straight away. You have to be a little bit patient. You've got to wait for these moves to develop. Occasionally, and I've said it many times before, occasionally you do get what Anna calls, what we both call a V-shaped reversal, or V-shaped rally, or V-shaped top, where you get one signal and bang, the market then reverses instantly off that. It happens, and if you miss one of those, you might think, oh, missed that move. Well, fine. The vast bulk of them do not behave in that way. They tend to behave in this way, where you'll see the signal come in, you'll maybe confirm with further weakness, and then the true move begins to develop sometime later. And that's certainly the case on the NQ daily that Anna was talking about. We then get this delightful price waterfall to the downside. We've got rising volume classic. It's that is what you want to see in a price waterfall. You want to see the market falling. You want to see the volume rising. Then we get the biggest volume bar of all under this candle at the bottom here. And again, we get the volatility trigger. So we know we're in a fast move lower. The market makers and big operators are going to be trading in there. They're going to be setting the traps for traders to jump in on the fear of missing out, because all the Johnny-come-latelys down here will then be ruining the fact they've not jumped in. They start jumping in down here, and then bang, the trap is closed and they're trapped and they're regretting that decision, which they'll probably repeat. The next candle then comes along, and this is where you start to see the development of the move away. You've got really nice volume under it. You've got a nice deep wick here. The market's rallying, and clearly within here you've got some buying as well, because there was a wick to the lower body also. So you're expecting the market to at least congest, and as a trend reversal, you're looking for the opportunity to reverse trade that. But again, you've got to be a little bit patient. Yes, you could get in on this candle, but you've got to accept the fact that you've got 3 more candles. And bear in mind, this is a 15-minute time frame, so we're trading 45 minutes to an hour here. In addition to that, you've also got the volume point of control, which is down here. So your expectation is that this market is not going to rocket, probably going to sit through some more congestion, but you are getting into that long position on the reversal off the various signals that have come in. It's just a question of being patient and waiting. There was a question in the trading room, in the VPA trading room earlier on, about how many pips you should allow on a breakaway trade. How many pips do you allow, or points do you allow, before you actually jump in? There's no hard and fast rule. You have to make that judgment decision, and the answer I gave was, well, look, wait for the first candle to build, and if it's on good volume and it's in agreement, then you make a decision thereafter. But there's no rule book. There's no set of rules that says, on this scenario, on a 5-minute chart, you only need to allow 5 pips on the breakaway, etc., etc. And it's the same with the application of volume price analysis. You read it all the time as you see it. As you become more experienced, you will learn that you have to be patient. You'll see the signals all the time. You'll see anomalous signals, high volume on compressed price. You'll see hammers. You'll see shooting stars. You'll see weakness, you'll see trap moves, you'll see all sorts of things. And you just have to be a little bit patient and just wait for them to come to you. That's on 15. You've got exactly the same thing going on here on 30. Again, move to the downside. We had the big volatility candle, ton of buying in here, lots and lots of volume, looks nice. Doji candle to follow, and then off we go. We're starting to break higher. And in terms of where that's going to develop to, you're then starting to look at other things. You're starting to look at support and resistance, or rather resistance in this case, certainly on the way up. Very minor in terms of price-based resistance here. And you're also looking at this low volume node that's sitting in here. So the market, if it gets to that level, 17.6 odd per ounce, it should go through there fairly rapidly. So it's just a nice example on silver, which I thought I'd pick up. When you go down onto the daily, again, you're looking at the charts the whole time to give you some idea. And we put a post about this again this morning. Is, you know, this price action was great. You know, nice widespread up candle, good volume. What did we get yesterday? Narrow spread candle, same amount of volume. So it's looking a little bit weak anyway. It's confirmed by the fact we're trading around this guy, the volume point of control. So what are we expecting to see? We're expecting congestion to develop, and it is. And then you start to look at the context of where the market might go in the longer term. And in terms of short term, this is onto the 10-minute. You know, if you were going to take a trade to the upside, looking at the long side, you know, what have you got in the way ahead? Well, the volume looks okay up to about this point. Then it gets a bit heavier around here. You've got two very, very strong levels of resistance on this chart. This is on 10-minute. So it's a question of, you know, is 15 cents an ounce enough for you or not? It's as simple as that. If it isn't, then sit tight and wait till something better comes along, or perhaps in another market. Let's just... Yeah, can I transfer back to you? Yeah, I'm just going to transfer back to Anna very quickly. Hold tight.